Hi guys, welcome to another honeystocks.com weekend analysis for, I think this will probably go out on Sunday the 1st of March 2020. I know for many of you watching this week that the market will have been absolutely horrific. I think the theme of what I'm seeing, one with the emails, with the social media comments, the messages I'm receiving, etc. I know that there's been a lot of distress out there for many of you that maybe didn't get defensive ahead of time. A lot of you were very, very surprised that I put out my client only analysis last week. And one of the reasons I did that last Saturday was because I understood the importance of what was about to happen. There was a very, very danger sign that was posted to us on Friday. We had a breakdown, a failed breakout in one of the major indices, and I'll talk about that in a second. And obviously, I'll walk you through quite a few charts as to what I was seeing. So hopefully, you get some value from this. But I do hope that many of you watched last week's video, and I appreciate everyone that's obviously reached out to thank me after last week's video. I know that it could have been a hell of a lot worse, but the reason I put that out to social media again is really just because I don't want to see anybody suffer really badly in the markets. I don't want to see anybody have difficult conversations with family, having stress at work, etc. Because what technical analysis really helps to do, it doesn't predict crashes, and I think this is something that, for those of you that are, buy into the CNBC, the Bloombergs, and all the guys that are, talking, not well, I consider it to be nonsense. Technical analysis just helps us to get defensive ahead of time. It doesn't predict crashes, like I said. It just helps us to get defensive. And I think when you have that in your locker and you understand when the market is really just flashing these very clear warning signals, we would all be the greatest investors and traders in the world with hindsight. But the key is to identify what's going on in real time. And for those of you that didn't catch last week's analysis, I'll post a link in the description. I would highly recommend you go back and watch that, because it really does give the technical insight into what the top technical guys are seeing. And, I can't say that all of my one-on-one clients or all of my annual subscribers got out the market in time, because obviously there was a gap down on Monday. But what I can say is that a large proportion of them had reduced their long exposure going into the weekend, so it wasn't as bad as what it would have been. And I think for those of you that have obviously been burned really badly, wondering what's happening, it's obviously a record-breaking decline this week. What's going to happen over the weekend? Is there going to be more news? Who knows? But as always, I'm going to back everything that I'm going to go over this week with technical analysis. Again, I don't think it's a time to be getting aggressive. There's many of you out there that are going to be buying this dip. There's many of you out there that are just going to go launching yourself into positions. I don't know if that's necessarily the right thing to do. But, again, hopefully you get something from the analysis, and if it helps you in some way, please give the video a thumbs up, a like. I know I've been rambling on here for 3-4 minutes. If this is your first time here, stick around, because it's probably going to help you in some way. At least I hope so. But yeah, let's dive into the charts, guys. As always, guys, before I get into the charts, just make sure that you're comfortable with that before watching any further. Just basically saying that there's not any investment advice here. All of the information presented is just my opinion and nothing more. Maybe to give myself a little bit of credibility, I know most of you know this already, but maybe if you're new to the channel, I'm registered with the CMT Association, working my way towards my chartered status at the moment, and technical analysis is what I'm widely known for. If you do get value from this, please do subscribe. In the bottom right hand corner, there should be a little subscribe button, bell notification, and if you could give it a thumbs up, it really helps with the YouTube algorithms to get my content out there. And if you are somebody that does struggle a little bit, maybe with your trading, risk management, intermarket analysis, whatever the deal is, you can maybe stick around for a couple of minutes at the end and I'll walk you through this. So, charts. Now, as touched on a second ago, I don't know if I necessarily want to labour the point that the market has had a complete meltdown within the last week. We all know that. So the question that I'm really trying to answer here is, where is the market support? Where are we likely to find support in the market? And is this a dip that we can look to buy? Now, I think the answer that I have for that is probably not going to appease many of you, but we do need to wait and see. And obviously, when we look at something like the S&P 500, we can see historically that when we had the correction back in October, this was a support level that was a catalyst for buying back into the market. This was a mega profitable bounce. If you're part of the Honey Stocks trading community, client base at that time, everybody was buying back in on this support level. Now, we're obviously not there. I do take the view that if we do get a break below this level, then that's obviously a huge issue, and we're probably going to be looking at an 18-month bear market at that point. But current support levels, now, it's obviously not escaped my attention that late on Friday we had a bit of a rally into the close. Now, the question that we have, is this the textbook dead cat bounce to trap everybody, or is this the start of a recovery that we can look to buy? So we've got a bit of support here within the S&P 500. If you go and look at, there are many charts. I've walked my clients and subscribers through around 10 different charts this week, but they all are basically showing quite a lot of the same things. But we've got a little bit of support here. Now, huge move with some of the big tech names on Friday. I think when you look at the individual charts, I'm going to be going over a few of them in a second. A lot of them had a really late rally. But the one thing that I am going to be touching on in a minute or so is volatility and the chart for volatility. I think what I need to really say here before getting into the individual charts is, in order to move into the market at the moment, you need to be massively comfortable with volatility risk. You need to have well-chosen stop levels. You need to be able to handle the mental hurdles of dealing with those $4, $5, $10 swings that we're seeing 2-3 times a day. It's not an environment that I'm particularly comfortable in. So obviously it all comes down to individual risk tolerance, and you need to decide and get a game plan together if you do want to initiate in the market. I think it makes a lot of sense, and it's common sense to me that if you are going to move in, smaller position sizes with a view to maybe scaling in a bit more, very tight leashes on your positions. So we've got a bit of support here with tech and the triple Q. To the other end, we've got a trade that's been working very well for our members. This is the chart for TLT, Treasury bonds. It's clearly a flight to safety at the moment. So when we're seeing distress in the overall market, we can look at other areas of the market for the areas that the big money are going to be allocating risk to, and I think TLT is one that's been working very well since we had a breakout and a move above 150. Gold, this has been a big one this week. Now, just for full disclosure, I got burned to death by a position that I initiated in GDX this week. Now, one of the simple reasons for that is we got a failed breakout with the gold miners. Now, when the market is in distress, we can generally anticipate these moves into the flights to safety. I touched on bonds a second ago. Precious metals is another area. Now, gold, rather surprisingly, I think to absolutely everybody in the investment community, technical community, whatever you want to call it, was surprised that gold had a huge decline this week. So what I'm looking at here are potential support levels for gold. We are still in an uptrend with gold. I do understand that as a safe haven asset, it's not the fastest moving. You do have these prolonged areas that it chops about sideways and then starts a gradual run again. But what we're really looking for with trend following is we want stocks that are moving from the bottom left of the screen to the top right, and gold is generally doing that. But I think if we are looking for a potential dip, then gold, this seems like it might be a logical support level, and I think this is, certainly a level that you might want to consider, buying the dip, provided that the market is still in a bit of distress. Now, the VIX. Now, I'm assuming a lot of you understand the relationship or the inverse correlation between the VIX and with the overall broader market, the S&P 500. What you tend to find is that volatility spikes when we have distress in the broader market. Now, this is the volatility index VXX. You could look at VIX as well. They're the two most popular. I think the VIX is probably the most popular, but VXX has been massive this week. It's obviously had a huge run, the 88% since the end of January. So that's been a massive winner for a couple of my subscribers that obviously anticipated the decline in the broader market and used volatility as a hedge. As we can see, that's a monster move. If you're holding options in that, then that's utterly incredible. So I think if you are out there and we start to see these key levels in the broader market break support, then you can look to other areas like the volatility indexes, like the TLT, like gold, etc., and try and figure out a game plan, work out your risk to reward propositions, etc., etc. Now, most of you are looking for individual stocks that you might want to be buying the dip on. Now, I'm going to be touching on Apple, Netflix, and Amazon. Just obviously, they're three of the big boys. They're the ones that I've been requested a lot this week. So I think with Amazon, obviously we can clearly see that we've had a failed breakout here, and it is starting to decline. So if we are looking at the chart here, there's a case to be made that we do have a little bit of a support level there. Is it a key level of support? I'm not so sure about that. I think what we understand is that when these key support levels break, it does tend to start a little bit more of selling action, distress selling. But I think the line in the sand for Amazon, if you're out there, I think this is the level to keep an eye on. This I would consider to be a kind of mini level. If it breaks below that, you would expect it to go and test around 1700. But at the moment, I think what I'm trying to do is really just to filter out the news. Now, the reason I'm trying to filter out the news is because price tells us all available information, and that's something that I think is lost on everybody. I think a lot of you will be out there watching the CNBCs and maybe watching the Bloombergs, and you'll be scared out of the market because of the headlines on coronavirus. But if you actually observe price, you can actually see what's going on better. You know that when price is going down really badly, you already know the news is bad. So, why not focus on price? Because it's price that tells us where the support levels are, and the news, in my observations, tends to be a couple of days behind the price. You tend to get the good news coming in once price has already told you that. So, if you're out there and that's lost on you, I would just urge you to just test it out for a little while, because if the market finds support, you don't want to be jumping in a few days late. You want to be able to get in. And I think with Amazon, I think this is a key support level there. I think with Apple, Apple's in a bear market apparently, down 21.5%. But again, we can see here, we've got a very key logical support level, 38.2 retracement Fibonacci level, and I think provided that this level holds, I think you can still be bullish on Apple. But again, guys, I will happily revisit that thesis the second the market declines, and that market decline might happen instantly tomorrow. So, I wouldn't be jumping in, buying anything in the pre-market or anything. I think you need to be very, very diligent about what actually happens from the off on Monday, Tuesday certainly. Netflix is actually holding up pretty well. We've obviously had a breakout. It looks like we're getting a bit of a retest. So I think provided that we stay above this level, I think you can continue to be bullish on Netflix. But again, I think it's just a case of managing risk, keeping a tight leash on your positions. Now, with Southwest Airlines, it's very, very difficult at the moment, and I think it really hit home to me this weekend actually. I'm supposed to be in Stockholm, Sweden this weekend, but I made a decision on Friday to not board the flight because I'm just not comfortable with passing through airports and being trapped on a flight with, you know, potential viruses, etc. I'm obviously being super cautious, and you know that's just my personality, but you know that tells me what I need to know about airlines. You know, if that's my view, how many other people are taking that view? So that tells me that airlines are likely to get hit. We can clearly see that with Southwest Airlines, it's been a monster move recently to the downside. But again, if these key support levels break, guys, if you're out there and you're maybe holding Southwest, you might want to start thinking about a game plan. You know, you might believe in the fundamentals of the company. I'm not here to question that whatsoever. I have got full and utter respect for the fundamental game. But, you know, the technicals tell me that if this level breaks, then you're going to get more distressed selling. But technically, you can still, you know, be bullish above this level. But, you know, it wouldn't surprise me if we start to see the airlines reissue guidance and all the rest of it and lower expectations. And that brings another set of problems. So if you're out there and you're in Southwest Airlines, I think that's a key level to keep an eye on. A lot of you will be aware already with HIIQ. This is one that I've talked about to death over the last few weeks since we got this breakout, and I don't know if we can say that there's a stock out there that has held up as well as this one has. This has been a mega profitable trade for many of our subscribers and clients. Many are continuing to hold, and I think the fact that it's dropped $1.50 in the face of a correcting market, I think that tells me everything I need to know about the strength of this stock. So it's going to be very, very interesting to see what happens with this one over the course of the next week. But again, if you're out there, I think you can continue to be bullish. Obviously, always need to be aware of where the danger zones are. So you just need to manage your trade and manage your risk. CDNS, I think this is a key support level that's now been brought into play. Obviously, I touched on the rally or the bounce that we had in tech on Friday. So this to me now shows us a key level of support for CDNS. Again, I think you can continue to be bullish above this level, but below this level, I think you probably need to start to get a game plan together. EHTH, very, very similar, had a huge rally on Friday. This is a stock that a few of our subscribers have been in since that. Obviously, the huge decline stopped those that were in there out. But again, we're looking for support level, guys, and this looks like it might be a key support level. Same for Starbucks. I think we've had a breakout from, or a breakdown I should say, from a triangle pattern, but where's the support? We're just identifying these support levels because, as I said, price tells me everything. I think once we start to get these support levels come into play, it just makes the decision making process a lot more easy than watching the news and listening to headlines. But you know, like I said before, it wouldn't surprise me in the slightest that if we start to see, you know, further downside next week. So I would just urge you all to kind of get a game plan together. Now, I've had a lot of questions this week on Okta. Now, for those of you that have maybe tuned in and you're looking for the holy grail decision making process for Okta, unfortunately I don't have it this week. I think what I'm really trying to highlight with this particular stock is it's chopping about sideways. Now, I think, you know, it makes, you know, perfect sense to me that again we just want to be aware where we might need to, implement game plans and start to maybe think about hedging or, selling the stock. And for me, I think these are the levels that I would be looking at here. I think if you get breakdowns below those levels, I think you obviously get a bit more selling action, shorting, etc. then becomes viable. So yeah, it's chopping about sideways at the moment, and that's really the view. But when we look at Twilio, if you're looking for an option, if you want exposure to the software tech, if you believe that this is a dip that you can buy, again, just be aware of where the blind spots are. It does look like we've had previous resistance possibly turning into support here. 28% upside potential if we move back to the top of that range. It's obviously more of a swing trade style. It's not necessarily the trend following style that I'm obviously widely known for. But absolutely, I do have swing trading in my locker as well, and this might be one that appeals. We've had a breakdown with Universal Display Corp. Now, obviously, it's had a breakdown in relation to the broader market, but what I'm actually noticing here is we're now starting to reach oversold conditions. Now, oversold conditions are characteristics of stocks that are in downtrends, not uptrends. Now, again, I'm not here to say to anybody that Universal Display Corp is a bad company or anything like that. What I'm really just saying is that on a technical level, the stock is now starting to show signs of distress and breaking down a little bit. I think most of you that are in the stock at the moment probably understand that a little bit. Maybe you love the fundamentals, maybe they pay a good dividend. I've got no clue. But I think if you're out there and you're in Universal Display Corp, you need to understand that the natural movement of price is for a breakdown, rally, fall away. That's textbook technical analysis, and unless price moves back into this level, then I think you do have to be bearish at the moment on Universal Display Corp. Roku, again, huge one that I get asked about constantly. I think with Roku, I think this is now starting to show itself as being a support level. Again, need to be super comfortable with the volatility that this one shows on a daily basis. I think this is a key support level, and I think if you drop below that level, then it's going to be a big problem for Roku. So if you're out there, I think you can still continue to be bullish, but I think this is the level to keep a very close eye on. AbbVie is holding up, well, I was going to say reasonably well. It's not really when you look at the percentage drop that it's had. But it has pulled back to a logical level of support. So I think if you are out there and you're looking to maybe buy the dip in AbbVie, I think this is a trend line that you might want to just kind of keep an eye on. It's obviously been really good recently. That was obviously an incredible rally there, but it's holding up. That would be the one thing to say. So if you're out there and you're looking at AbbVie, I think that's a very key level to keep a very close eye on. For those of you that are wondering why Nvidia had a monster move on Friday, I think you just need to have a look at the chart for SMH. The semiconductor stocks exploded on Friday, and I think the reason for that, I'm not looking for news on individual stocks, it's of no concern to me, but SMH hit the 200, I think it was a 200 simple moving average. It had a monster bounce, and that had a knock-on effect to all the stocks aligned with the index, and Nvidia is obviously a massive part of that, and we had a monster rally on Nvidia. Now, I'm sure those of you that are maybe on Stock Twits will have an explanation for that. Maybe there was a company announcement, whatever it was. But if you look at the chart for SMH, you'll understand that it's convenient when news comes out and technical levels are respected. Now, we've obviously got JD.com. Now, obviously, Chinese company. We've met resistance. This is just a trend line that I've built in. It does look like we're in a bit of a sideways holding pattern at the moment. But again, I think it just makes a lot of sense to just understand where the blind spots are on the chart. It's chopping about sideways, and you know, when we start to get, you know, a move from the top end, it tends to move to the bottom end, which is slowly working its way towards. So I would just be keeping a very close eye on this one. I think any rallies, I think you need to just keep an eye on this level as potential resistance, and that then becomes a semi-loose profit target if you're in there for the technicals. Speaking of technicals again, McDonald's monster bounce on Friday, and it does look like the line in the sand for this one looks to be around 190. Again, below that level, I'm not so bullish. Salesforce has obviously had a bit of a decline here. Let me just switch over to the daily chart here. So I think that the daily chart probably illustrates things a little bit better. I think we can clearly see, again, support level for the stock, and we've not reached oversold conditions at the moment. So that's a characteristic of an uptrend. But again, you need to understand where the line in the sand is, and I think that line in the sand is obviously just below this this support level. So it looks like we've had previous resistance turned into support with a retest, and you know, I think you can continue to be bullish above this level, but definitely get a game plan together for a drop potentially below. Now, there's obviously been an issue with energy, oil. For those of you that have been looking, or maybe you're buying oil stocks, you need to understand that yes, Chevron, Exxon, they're all big companies. Yes, on the surface they look like they're offering a big discount. But you also need to understand that the market doesn't care about perceived discounts. When we get these key technical levels break down, we know that oil now is trading below $50 a barrel. Now, that's a huge deal. And what we've seen with the decline in oil, we're seeing a further decline with these energy stocks. Now, during the week, I provided 4 charts to some of my guys who were requesting energy stocks to short, and this was one of them below $100, and lo and behold, it's obviously dropped. Low is 90. It's obviously up at 93 at the moment, but it's in a downtrend at the moment. Again, as I touched on before, it's very, very normal when we get into massively oversold territory that we get these bounces, but these bounces are generally short-lived and they're followed by further declines. So I think if you're out there and you're in Chevron, I think you need to be bearish on the stock at the moment. Happy to be proven wrong if it moves above $100. But again, I'm not here to tell anybody what the fundamentals look like. That this is just simply the technical view. Now, just to touch on a few more charts, XLF is obviously a super important chart. Financials, the stock market doesn't tend to move forward unless financials are participating. Now, again, we need to understand that we've got these long-standing support levels with this particular ETF. And when we get these key support levels breaking, that's going to have a knock-on effect to the stocks aligned with that ETF. So I think Goldman Sachs is obviously one that's obviously had a huge decline along with the market. Again, looks like we might be getting a bit of support here around $200. We know it dropped as low as 150 in the correction in October 2018. So these are key levels that I'm keeping an eye on. I think if we start to see breakdowns in XLF below those levels that I highlighted just a second ago, that's probably going to be a major issue for the overall market. You're probably going to find the S&P 500 is breaking support. You'll find the Dow is breaking support. So you do need to be very mindful, and this is obviously a support level that I think you need to keep an eye on with Goldman Sachs. I think if we get a breakdown below this, it probably starts to move towards 180, and then you just need to obviously keep a very close eye, and you're looking at a potential 100% retracement. So that's something that you obviously need to pay close attention to. I think JP Morgan is the other one that I really want to touch on. Again, it looks like we've had previous resistance, we've had a breakout, and it doesn't look like that's held. And obviously that's the daily chart, so I'd be keeping a very, very close eye on this one. I think if you get a rally and you get a move back up above 120, you're probably going to find the market is probably rallying at that point. And therefore it's JP Morgan, Goldman Sachs, they're obviously incredible companies. You can probably buy them at that point. But until we start to get these moves back up here, I'd be very, very cautious, because the one thing I understand is last week was very, very bad, but it can get a hell of a lot worse. And I think those of you that are watching probably need to just get your game plans together and just be super cautious about what the market is actually telling you. So I suppose that obviously leads me on to what we do at honeystocks.com. I'm not here to tell anybody that you got things badly wrong last week or anything like that. That's not the way I operate. It's not the way I work. But if you do like intelligent analysis, if you are somebody that would like to add technical analysis to your decision-making process, at the moment, for any sign-ups to our annual subscription, we are giving away full access to our technical analysis program as well, which we do charge a lot of money for. Now, we do have a 200 members limit. The reason that that's in place is because I don't want to have the world's biggest trading community. I couldn't think of anything worse. And I provide a lot of support for my subscribers and my clients. So if you want to have access to our trading ideas or scans or premium weekend chart and analysis, to our trading community, if you want a backup chart, we provide it all, and it's all within our annual subscription. They're very, very high value, low cost, and for anybody out there that wants to pick it all up and add technical analysis to your game and obviously have support charting, etc., feel free to register. And like I said before, I'm widely known for technical analysis. It's what everybody follows me for, and I know most of you have probably checked out our website at this point, honeystocks.com. Feel free to go and check it out. And I think one of the really cool things about what we do at honeystocks.com is we log every single trade idea that we've posted to our community over the last 3 years. So feel free to go and check that out. And I'm not saying for 1 second that come in and you'll make 800%, I think 1400% in 2018. I'm not saying that at all. What you need to do is just to see whether the types of stocks that we are recommending and posting are the types of stocks that you typically buy. I'm not a get rich quick, I'm not a day trading guru or anything like that. We have a very logical, systematic approach to our analysis, and we are generally in positions for weeks, sometimes months, if the trade is going to plan. We're not in it for $1 or $2 moves, we're in it for $10, $50, $100 moves, because that's where the big money's made, especially when you factor in things like options. So for those that wonder what our trade ideas look like, I think ENPH is the one that obviously I think everybody is in love with. I know this is one that I talked about on social media a few months ago. Massive move. We've obviously had Starbucks, which was a big one recently. AbbVie, which did very, very well. HIIQ, again, this is the chart. So if you're maybe trying to fit trading around a career or a business, if you're trying to get away from day trading, I think we can probably help. Maybe if you're just looking for a bit more consistency with your decision making process, if you're wanting to learn and not just follow others, or maybe you're just wanting to get the basic idea of how technical analysis works. Like I said, we're doing a really good deal at the moment, because I know what it's like to hunt around YouTube and learn from all those losses, and it's horrible, especially when you look at what's happened this week. But you know, if you do want to learn a new way, and maybe you want to align with an incredible trading community, and you know, a style of trading that works for most, then you know, feel free to check us out. But there's a couple of links in the description for you to register your interest, and maybe we'll welcome you aboard soon. But from the bottom of my heart, thank you very much for watching, and please stay safe out there next week. Thanks very much.